This is an Uncovered Japan Company research report on Nippon Kodoshi, ticker 3891. The company makes the ultra-thin separator paper inside aluminum electrolytic capacitors, a small but essential component in AI servers, electric vehicles, and industrial power systems. Nippon Kodoshi is a rare specialist. It holds roughly 60% of the global market for aluminum electrolytic capacitor separator paper, earned a 19% operating margin in fiscal 2026, and has a 73.6% equity ratio. The trade-off is valuation. The report places the forward price-to-earnings multiple near 32 times. Inside an aluminum electrolytic capacitor, the separator keeps the aluminum foils from touching while holding electrolyte in place. It must be extremely thin, uniform, and reliable at scale. That makes the product a precision electronic material, even though the company sits in the paper sector classification. The moat is not a single patent. It is decades of process knowledge, raw material blends, machine settings, porosity control, and hard-won experience. Once a separator is qualified in a capacitor design, customers have little reason to risk a change, and because the global market is only about 25 billion yen, the prize is too small to justify a difficult attack by many potential entrants. The recent financial history shows both quality and cyclicality. Revenue fell to 14.8 billion yen in fiscal 2024 as capacitor customers destocked, then recovered to 18.6 billion yen in fiscal 2026. Operating profit moved more sharply, from 1.7 billion yen at the trough to 3.5 billion yen in the recovery. Cash flow is the more encouraging part of the recovery. Fiscal 2026 operating cash flow reached 5.2 billion yen, while free cash flow turned positive at 3.8 billion yen after earlier investment. Alongside the strong equity ratio, that gives Nippon Kodoshi room to invest through a downturn, rather than retrench at the worst point in the cycle. The company entered the recovery from a position of strength. Its fiscal 2026 equity ratio was 73.6%, while return on equity recovered to 10.1%. That balance sheet resilience is especially important because the core business is concentrated in a single product and demand cycle. AI servers are a meaningful tailwind because their power circuits use capacitors, but the same link adds concentration. Roughly 80% of sales comes from the core capacitor separator product. Electric vehicles and industrial applications broaden demand, yet a correction in the capacitor supply chain can still lower factory utilization and pressure margins quickly. The central investor question is valuation. The report estimates a forward price-to-earnings ratio near 32 times, well above the company's own recent single-digit to low-teens history. That does not erase the operating strengths, but it means future returns depend more heavily on sustained growth, margins, and AI-related demand. The report's 3-year scenario analysis underscores that risk. Its base case sits below the June 30th share price, while the bull case requires a more durable, AI-driven demand cycle. These are research scenarios rather than price targets, but they frame why a high-quality business can still be a difficult investment at the wrong entry valuation. Looking ahead, the research points to higher value capacity and functional materials as the strategic levers. The author's fiscal 2027 revenue estimate is 21 billion yen, with a fiscal 2029 base case near 25 billion yen. Execution at the Yonago plant, demand from AI and electrification, and progress in new materials will be the key indicators to watch. To sum up, Nippon Kodoshi has a genuine niche monopoly in a specialist materials market, a strong balance sheet, and exposure to AI server power demand. Its vulnerabilities are just as clear: a concentrated product base, cyclical utilization, and a valuation that already reflects much of the optimism. This is not investment advice. It is a starting point for your own research. For a much deeper look, visit the free deep dives at uncoverjapan.com. We go beyond the headline numbers to cover the business, financials, valuation, risks, and catalysts. This video is for information and education only. It is not investment advice or a recommendation to buy or sell any security. Always do your own research.